What are you most concerned about when it comes to the economy?
That's a great question. I'm most concerned about the wealth gap. I'm most concerned about the fact that, I mentioned the top 20% have been doing well and the bottom 80% have just been holding on. I think in reality, it's much more like the top 90% or even the top 1% versus everybody else. We're seeing this accelerating wealth gap where the increasing majority of the population is basically losing faith in the social contract. They're saying, look, I was told that if I work hard, if I keep my nose to the grindstone, if I do all the things I'm supposed to do, I'm going to have a good future. In fact, one, hopefully that should be even better than my parents had. I think if you're a millennial, Gen Z right now, you have given up hope of having a better quality of living than your parents had. Mm-hmm. And I think more and more of them are even giving up hope, the fact that they're going to be gainfully employed.
I'm joined today by Adam Taggart, host of Thoughtful Money. Some of you may have seen him on his previous channel. He's grown very popular on YouTube. I encourage everyone to check out Thoughtful Money. Adam, great to finally meet you in person. I've been following your work for quite some time, so pleasure to meet you.
Well, thanks. Pleasure to meet you. I've been following your work for quite some time, David.
Yeah, two YouTubers unite. This will be an interesting talk. I want to talk about your views on the media landscape, your views on the macroeconomic landscape, because you've interviewed a lot of people. You're an expert of experts, if you told me offline. But first, Thoughtful Money. Where did that come from? How did that name come about? As somebody who started my own channel, I've been stuck on looking for a name for my channel, and finally I came up with a creative one of naming it after myself. But what's the rationale behind Thoughtful Money?
Well, so I wrestled with whether I should name it after myself or not. And some of your viewers may be aware, I had a previous company where I was doing a lot of the same thing, macro interviews, and leaving that company to start something new. I wanted to make sure that my audience could easily find me. And a lot of people said, just lean into your name, right? Call it Adam Taggart something, Adam Taggart Report, right? But David Linden Report was already taken.
Sure, yeah.
And I decided not to for two reasons. One, eventually I want to build something that will last longer than me. And so I don't want the brand just to be one guy, right? So I want to eventually be able to bring on other people, expand the offering such that it's not just dependent upon whether I wake up in the morning for the audience to get what it wants, right? So I wanted to come up with something that wasn't just my name. And so trying to figure out, well, what should it be then? I went through a little exercise that maybe I'd encourage that you might want to do, which is on Twitter and a few other social media channels, I just asked people, hey, when you think of me and my style of interview and whatever you think of me, what words come to mind, unprompted? And so I got hundreds of submissions, right? And then I put them into a word cloud. And what a word cloud does is it basically just puts all the words that were submitted together, but it sizes them based upon how frequently they were mentioned. And thoughtful was right at the top.
You're like an aggregator of information because you talk to so many people, you've collected so many different viewpoints. What are the common, I would say, the common concerns that your guests have expressed to you regarding the economy in 2024?
Great. I would say uncertainty really is at the highest level. Is an inordinate number of the experts I've talked to over the past, say, 2 quarters have said that 2024 is really one of the years where they've had the least confidence in what's going to happen.
Yes.
And so just get into a punchline. That's why so many of them are encourage so many people to be holding a healthy amount of cash or cash equivalents right now, particularly T-bills, right, where you can basically get paid to sit in safety, to wait out the uncertainty, and then hopefully when things get a little clearer, you've got dry capital to deploy. But in general, I'd say one of the big things they're worried about is so much of the status quo is oriented around a soft landing now. Right, it's the markets have bought into this. It's what the policymakers are leaning into with policy, and you've got that on one side that, hey, you know what? We've made it through the rough years of COVID, and we're going to come out of this thing with a butterfly soft landing. The economy is going to continue on a robust trajectory, and we're all going to be okay. And on the other hand, you have a lot of people fearing that you can't deform the system as much as we did over the past couple of years without some sort of reckoning. And you probably heard me earlier today talk about my concerns about the lag effect. where a lot of the folks that are championing the soft landing, no landing scenario are basically saying it's different this time. There aren't going to be any lag effects to really worry about this time. And I think that is what folks on the downside are worried about, which is that we're going to see corporations continue to suffer as cost of capital remains high. We're going to see consumer households continue to struggle, as we're already beginning to see a lot of indicators that they're having to take on more and more debt just to maintain their standard of living. And that if we get to the point where job losses enter the equation, then it's kind of like, that's when the last bulwark towards recession falls down, and then recessionary pressures start getting underway at that point. So I think it's this tug of war of like, who's really right here? Is it the soft landing camp, or is it the lag effect camp?
What do you think is your objective of your channel? What are you trying to do with your work? Ultimately, what do you want the audience, the viewer, to take out of your work?
Great question. So that one's easy to answer. So again, as you heard me say in our last session that we were just in together, the American education system has done a terrible job in teaching financial literacy, and I hear from other people in other countries that seems to be sadly a pretty common event elsewhere too. And so people are basically feeling underprepared for being good stewards of their own wealth in a highly uncertain environment. And so what Thoughtful Money was created for is basically to educate and empower the average investor to build sufficient wealth to fund their life goals. That's the mission of the channel. So it's basically to help people say, look, you don't feel like you were taught enough about how the economy works, about how market works. We're going to try to address some of those shortcomings. We're going to bring in the smartest experts in money in the markets and let you crawl inside their brain. And if I do my job right as the interviewer, which you're very good at, is I'm going to basically try to distill what they've said down into just totally digestible, understandable words that a regular person who didn't get an economics degree can understand. And then where possible, we're going to give you ideas and guidance on how you can put that into action in your own portfolio to make hopefully better informed decisions about how to build your wealth going forward.
Tell us how to preserve our wealth. I mean, it could be your opinion, it could be the opinions of your guests. Certainly this is a theme that's been discussed often on your show.
Yeah, absolutely. I think first it just comes with sort of the basic tenets of investing. First off, full disclosure, this is an important part of the business model of Thoughtful Money. So to a certain extent, I'm talking my book here, but the reason why I built the book this way is because I believe so much in it, which is that I think the average person has too much going on in their lives to follow the markets really closely and to be reacting to them in real time. And a lot of them haven't been, educated in the basic tenets of investing in terms of position sizing, diversification, just the basic fundamentals of investing. And so I highly recommend that the vast majority of people work under the guidance of a good professional financial advisor, but not just a good professional financial advisor, one that understands the macro issues that you talk about on your channel and that I talk about on mine. And David, you probably are aware of this. Sadly, most of the financial professionals out there, they don't really get into this depth. They largely have been spoiled by a market that was, benefited from basically 20 years of support and intervention with the Fed put, with QE at its back, with a just buy the dip mentality. They're kind of dilettantes. So you want to find a good professional advisor who actually really gets their hands dirty and spends their time focused on the macro issues that we talk about, and then is following the markets closely enough that if audibles need to be called and portfolios need to be changed in real time, they're paying attention enough and know what to do.
Well, let's get down to it. What are your guests telling you in regards to the outlook for the economy and markets for 2024?
Okay, so I think in general, they expect slowing growth. I would say probably one of the biggest differences I have with folks is whether it's going to be more inflation or less inflation. There's a lot of folks, I would say there's an increasing number of folks getting into the sticky inflation camp, that it's going to be harder for the Fed to bring down than the Fed is currently expecting here. I think from an interest rate standpoint, I think probably consensus is that interest rates aren't going to come down fast enough to save us from the maturity wall that's barreling towards corporate America. And so companies are going to have to start, rolling over debt at much higher rates going forward. They're also worried about slowing consumer demand, and I think we're seeing cracks in consumer demand kind of happening at an accelerating rate right now. So I think right now, given that we've got an economy that's still basically 2/3 consumer spending, I'm seeing increasing concern that we're going to start entering a demand drought.
Consumer demand slowing down. I mean, can you elaborate as to which sectors of consumer demand are slowing down most? Is it the luxury goods? Is it consumer staples? Is it
So we're definitely seeing it most in discretionaries and luxury goods right now. And you've probably seen some of the recent reports from the luxury providers where they're finally beginning to crack, right? They've done very well, actually, the past several years.
I wonder if that's a leading indicator for the economy. I'm just wondering.
Yeah, I would think it is to a certain extent. And you know what you can say is, look, the bottom 80% have been struggling for a good while. And it's been the spending over the past couple of years of the top 20%. I think that's kept the consumer retail sales chugging along the way that they have. If that cohort is starting to tighten its belt and rein its purse strings in, that is going to have an outsized effect in terms of cooling off consumer spending.
Okay. Adam, what do you think about the stock markets right now? We talked about this offline.
Yep.
All-time highs this year. A lot of our guests, you and I, people we've interviewed, have been calling for stock market correction to happen. Obviously, nobody knows exactly when, but I'm just going to put this out there right now. Full disclosure, a lot of my viewers in the comments, you guys have been saying, this guy's been saying stock market's going to crash for a while. It hasn't. In fact, it's just been going up, right? So your guess, similar kind of story. Have you guys been mostly bearish or bullish on the markets?
I would say at the majority, I think most of the guests on my channel are bearish on the markets mid to longer term. I will say I've seen an upsurge in the past quarter and a half of people being more bullish on the market's short-term prospects.
Right.
And of course, not a surprise because the market really picked up after the end of October last year. But I've had a number of folks relatively recently saying that they expect Q1 to be like a barn burner quarter. And some of them, like Felix Zulauf, saying that is going to be the high water mark. And after that, that's when the wheels start coming off. Who knows? We'll find out. Your job and mine is just to track it in real time for our audiences.
Felix Zulauf, he said that interest rates may go to 8%. Is that a view you share?
Do I see interest rates being 8% this year?
I think, I can't remember his timeline, but I think, reasonably soon.
So I sure, in the longer run. So basically what I think he's responding to is he thinks that recessionary forces are going to start winning out this year. They're going to get to the point where the central authorities really begin to freak out at scale, come in and have a massive inflationary response to that. And at that point, he thinks that once that inflation really starts getting going, that it's going to require interest rates of like 8% plus to then bring that peak down. But that might happen 2025, 2026.
What are you most concerned about when it comes to the economy?
That's a great question. I'm most concerned about the wealth gap. I'm most concerned about the fact that, I mentioned the top 20% have been doing well and the bottom 80% have just been holding on. I think in reality, it's much more like the top 90% or even the top 1% versus everybody else. We're seeing this accelerating wealth gap where the an increasing majority of the population is basically losing faith in the social contract. They're saying, look, I was told that if I work hard, if I keep my nose to the grindstone, if I do all the things I'm supposed to do, I'm going to have a good future. In fact, one hopefully that should be even better than my parents had. I think if you're a millennial, Gen Z right now, you have given up hope of having a better quality of living than your parents had. And I think more and more of them are even giving up hope, the fact that they're going to be gainfully employed and never afford a house.
In what way? Their net wealth, or the fact that they don't own houses, or like how are you gauging this?
Yeah, I think everything. But basically just sort of, the American dream, the middle class lifestyle. I'll have a home, I'll be able to pay for my kids' I'll be able to afford kids, right? I'll be able to retire someday. I think most people have given up on retirement. I mean, even in my cohort, Gen X, retirement is kind of looked at something that might not happen.
What's interesting is that the younger generations have been the most educated generation in basically history, more so than more college graduates as a percentage of the overall population came out of the last two generations and the boomers, but yet fewer of them own homes. Why is that?
Well, for one thing, I wouldn't necessarily assume that a college degree means educated in today's society.
Okay.
I think the value of a college education, sadly, is not what it was a couple generations ago. But I think that, it's just the way in which the system has now sort of metastasized, where we largely have been very busy hollowing out the bottom part of the ladder for the on-ramp to jobs, whether it's been through outsourcing, whether it's been through automation, whether it's now through AI. We are doing everything we can to try to replace human labor with some sort of automated solution. And that makes it, really hard for unskilled workers to come in and begin to build skills that can then translate into marketable expertise. I think COVID really threw a wrench in the works too, where you had a lot of people who could have retired or moved out of the way and made space for younger workers, didn't for a while, and then actually we had the Great Resignation where a ton of them retired, and then now we've got the big problem is we don't have enough skilled workers to replace the ones that are retiring. We've totally underinvested in the trades, it's kind of a great question about college education. Like, I think we've directed a lot of kids to their disservice towards pursuing a college degree that actually doesn't have a lot of value for them, when had we directed them into the trades, it probably would have had a much better lifestyle, and economically we'd be much better off by having a better trained workforce for the economy that we want to build.
Interesting. I'm curious about how you transitioned into this field from where you've been. Tell us about yourself. You Stanford grad, I think you worked in tech. You could have stayed in tech. Now you do this.
Yeah.
What happened there?
I'll keep it quick.
Yeah.
As quick as I can. So I grew up, my parents got divorced when I was real young. I grew up with a single mom who was not educated about wealth building, investing.
Okay.
Saw her make a lot of mistakes and saw how money was just sort of a pervasive worry for her, right? Went to college, got out of college, and I was actually going to be a doctor. I'm from a family of doctors, and I was graduating in the early 90s when the Clintons took over the healthcare system, and every doctor I knew said, the industry's going to hell in a handbasket, don't go in, go do something else, at least for a while. So at the last second, I opted not to go to medical school and went to go work on Wall Street for Merrill Lynch as an investment banker. And I got a front row seat as to just sort of how broken that system is, in the sense that the last person that those folks are working for is the client, right? Wall Street basically exists to make itself money. I didn't want to stay there. The culture was not a good fit. I went to Stanford, like you said, to get my MBA. That's when the internet revolution happened. I then went and worked in high tech for the next 15 years or so. I started as the head of finance, or head of marketing at Yahoo Finance. And so over time, I started reading the folks in my spare time online as I lived in Northern California, where housing prices were going crazy, right? They were going to levels that just nobody had ever seen before. We were having this discussion about, is there a housing bubble brewing here? And of course, everybody, including the head of the Federal Reserve, said, nope, nothing to worry about, housing never goes down. When that bubble burst and we ended up having the GFC, it really validated the small number of folks that I had been watching online in my spare time, that I had gone out and sought out through my efforts to self-educate. What that led me to believe was, there's a lot of people out there who are hungry for what I call like financially nutritious content that they're not getting through the mainstream financial media right now. And realizing how the system is not geared to help them out, like from my early days at Merrill Lynch, understanding how new digital media could really help educate people. That's what I learned through my time at Yahoo. And wanting to help people avoid the fate that people like my mother had had. Yeah. I wanted to create something that could educate and, like I said, empower people to take control of their financial destiny and successfully build the wealth that they're hoping to fund their life goals. So that's kind of why I decided eventually to get out of the corporate rat race and start doing this on my own.
I don't think your mother's alone in lacking certain aspects of financial literacy. When it comes to financial literacy, what are some of the most common misconceptions about money management or personal finance or wealth preservation that you've come across in your career?
Yeah, we can talk about everything from over-concentration. If you talk to the average person who is investing their own wealth, a lack of diversification, a lot of it goes into the stocks that get all the headlines.
Yeah.
Right. Just like what 40% of every dollar that goes into the markets is going into those top 7 stocks. I would say most people I talk to who are just sort of regular investors 40% of every dollar in their portfolio is probably in those 7 stocks or even fewer.
Right. We did a panel just now. I remember we asked the audience how many people in the audience watch mainstream news. 0 hands went up.
Not a hand went up.
That was a huge shock to me, and I expected maybe not many, but not 0. Do you think technology, whether changes in technology, have played a role in that?
I do absolutely, and I think, not to pat ourselves on the back too much, David, but I think we're at the vanguard of that. I think technology has opened the door for alternative providers to bring different information, different content to the masses. You couldn't do that before. 10, 20 years ago, you had to own a network, right? You had to get a show on a network that had an audience. Now there's the ability for an independent brand to start up, like yours did and mine did, to reach an audience at scale. But you got to create good content, right? And I think that there's this sea change that's gone on where people are realizing that the content that they're getting through mainstream channels isn't serving them well.
Yeah.
And they're now saying, you know what, like, this just isn't helping. There's got to be something better out there. They're going out to do what I call self-educating. And if we're doing a good job by creating the right type of content, the technology can put us in front of them, and hopefully that's a good match.
I'm going somewhere with my next question. Okay. The evolution of technology has led us here where individuals can go online, talk in front of a camera, and reach hundreds of thousands, if not millions of people. I get that. The next stage of this evolution is no personality at all. We have AI deep faking you and I or anybody else, creating an avatar, prompting guests to ask questions, or just doing a report themselves. Is that the next phase? Are you and I going to be obsolete in 20 years? Maybe even less.
I think we have to be prepared for the possibility.
Okay.
Just like somebody might think, you know what, there's no way that an AI, is ever going to write a symphony as wonderful as one of Mozart's, or is going to paint a Mona Lisa or whatever, unprompted. There's a little bit of hope in me that says, nobody can crawl inside the human brain the way that a human can, and you and I can do a better job of putting ourselves in the mind of our
here is
avatar.
my ultimate question then. What can you, or perhaps I or anybody else in this field, do that a computer cannot in terms of hosting, interviewing, providing content?
Right. I think, and look, if I get replaced by AI on Thoughtful Money, it's not necessarily the end of the world, because I think it would free me up to add other solutions on top of the whole Thoughtful Money offering. I could say, great, the guy in front of the camera is taken care of by AI bot Adam now. But the thing I think that AI will have a challenge, it's the last thing they'll take from you and I think, is our ability to react in real time to what our experts are saying. Right? Any robot can just read through a list of prepared questions, right? I think what you and I hopefully bring to the table is the guest is saying something and we pivot off of that and say, oh, that's really interesting, but let me add a second order question onto this, because you just sparked a really interesting idea that I didn't plan coming into here, but that might be actually a more interesting piece of the puzzle than I initially was going after, right? And so I think we can curate the best discussion with the guest because we can be the avatar and know what our audience is really, the answers our audience really wants to hear, and so we can craft the conversation to get there.
So basically, they're not as good as conversationalists as we are. Also, I'll add to that, perhaps the AI or computer program doesn't have as wide-ranging an imagination as you and I in terms of coming up with ideas and topics to talk about, or ways to pivot into different.
You would hope so, and who knows? I mean, I'm shocked by how great generative AI can be in certain cases, so maybe not. The one thing I can say, David, is it's not going to have the good looks of a David Lin. Never going to be that good. Never going to be that handsome. Never going to be that charming.
You hear that, ladies? Adam Taggart proves. Anyway, I'll close off on this note. Give us something positive to look forward to when it comes to the economy. We've talked about the risks. We've talked about the concerns for yourself and your guests. What's something that could really drive value, add value, drive productivity, or perhaps just enhance our living standards? Are there some things you're looking forward to?
Yeah, I am. And let me put it this way. So, at the end of the day, and it's actually, well, at the end of the day, I'm very bullish on the human spirit, right? I'm kind of pessimistic on human nature, but I'm very bullish on human potential. right? I think technology will play, a big role. It'll continue unlocking opportunities that we didn't think about, and that's great. Um, but I do kind of think of humans sort of the way that Winston Churchill said he thought of Americans, where he said, you can always count on them to do the right thing only after they've exhausted every other potential opportunity. I think we're kind of in the long tail now of a lot of policies, a lot of decision making that has not been serving society in the direction that the economy is going. And I think that is going to eventually meet its ultimate terminus over the next couple of years, maybe decade or two. As that just starts to break down, we realize it wasn't sustainable, and we get forced to having to make the really tough decisions about like real reform, real changes. It's going to be painful, right? But I think it's going to unlock the door to greater prosperity for us going forward. And I do believe that once it gets painful enough, good leaders will emerge and we will make the right decisions. The problem is just like most people, we're probably not going to face that until the pain of continuing the status quo begins to exceed the pain of change.
Excellent. Excellent. Where can we follow your work, Adam?
You can go to thoughtfulmoney.com, or if you want to just follow my YouTube channel and watch the interviews that I do, like David does here on his, just go to YouTube, type in Adam Taggart or type in Thoughtful Money. That's where you'll find me.
Excellent. Thank you for being here, Adam.
It's a real pleasure. It's great to meet you in person.
Absolutely. My pleasure as well. And thank you for watching this show. Follow Adam in the links down below.